Welcome, 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 everybody. It is Wednesday, February 15th, 7:04 p.m. Eastern Time. Guys, welcome to Digital Goat Academy and welcome to Digital Wednesdays, where we pretty much do live trading, guys. This is live trading. Now, that doesn't necessarily mean that we will be always taking trades on these calls, guys. But the main objective is for Digital Wednesdays is live trading, or at least not live analysis for everybody out there that's trading in the foreign exchange market, so you guys can get a bird's eye view on how I pretty much navigate through the market, guys, and just any trade setups that I'm looking at. So if you're new, welcome, guys. If you are returning supporter, so returning subscriber, thank you for joining me, guys. Make sure you hit that like button, comment, and hit that subscribe button, guys, as well as that notification bell to stay up to date on all my content if you guys just need a reminder. But again, guys, welcome to Digital Wednesdays and happy hump day. So everybody that knows me, the Digital Goat guys always talk about the dollar. I'm out here in the United States. So any conversation I have is going to start off with the dollar because I follow my country's currency. If you're outside of the United States, I suggest you follow your country's currency in the form of an index, guys. There's many indexes out there, especially with the larger countries that's out there, such as like Japan, Europe, United Kingdom, guys, so forth and so forth. So if you're in a smaller region, smaller province, you may want to make sure that your country has an index, or look what region you fall up under, and you'll probably just have to follow that to manage the direction or your bias in the market, guys. But again, dollar index, right? If we saw this week, well, this morning, guys, the dollar was extremely bullish. And as you see, as we were heading into the market reset, the dollar pretty much started pulling back. Me personally, I do expect the dollar to have some type of pullback, some type of retracement down here, because if you just look at these wicks, there's money left over, guys, but this doesn't constitute that the dollar is ready to just fall back down yet. I am actually expecting for it to maybe, rise a little bit and then come down. But while the dollar's not open until like 7:45, the only data we can have is what it actually did prior to close, which it did start selling, guys. So if we're going to still continue to sell, I do predict that we'll probably have a gap, which will start making other currencies rise against it, guys. So if you just look at the dollar, we are bullish, but we do need some type of correction, maybe within this previous high, if not somewhere down here to create support. Whatever the dollar is going to do based off of that bias, guys. But I just wanted to start off with that because obviously when I go into my session, that's where pretty much the main premise of my analysis come off of, which is the dollar, right? But now I want to go into the euro, guys, because many of us have seen the euro selling, right? Now, this was the commissioner of one of the European banks over there, guys. They have commissioners or deputy executives, whatever their role is. I really don't care for their title, but it is important what these figures say. Now, I can't pronounce his name. I'm not even going to try to pronounce his name. I keep forgetting to drop it in the description. So if somebody reminds me, or if I remember, I'm going to drop it into the description below, guys. But if you see right here, I've been pretty much tracking all the areas that the euro has pretty much created gaps. And I was looking for recovery, right? So I'm looking for the market to actually recover from these gaps or to collect the money that's within these gaps. Well, let me just show you guys on a zoomed in viewpoint. Let me make sure. All right, we should be better. testing. Yeah, we should be better. So all these circles that I have are pretty much areas where the market gapped. And if you look, anytime that the market gapped, it obviously, went the opposite direction for a little bit, but then recovered and claimed that up, such as over here. If you guys look, trying to get this to spread. There we go. So right here in this general area, the market gapped up, swept it down, gapped down, swept it up. Are y'all seeing that? Swept it up. So as the market pretty much created resistance up here, definitely looking at this to be high caliber resistance, the market actually gapped down. So I do anticipate it's sweeping the market again. And then from there, we'll probably see the market get ready to push down. But my overall bias, guys, is that the euro during London, it will probably gap up, creating another gap, sweeping this gap over here. And then when it decides to recover, it'll make its move to the downside. So we could see the euro actually push a little bit higher than expected, guys. But the one thing that this gentleman mentioned was that the euro was at peak inflation. Now, maybe like the next week after that, what is this, 4 hour? Yeah, maybe like the next week after that, the euro started falling and then it rose, guys. So once he said that we were at peak inflation, the euro dropped and then rose to pretty much sweep up this liquidity and actually created a higher high in order to start selling, guys. But if you look, we have a lot of liquidity left over here, right? We have a lot of liquidity left over in these zones and imbalance. So even if you're confused about liquidity, as a new trader, guys, just look at imbalance of the candles. And imbalance is pretty much areas where the market didn't retest at least 50%. So if I just put my fib at least to this candle, because this is the most clearest imbalance that I can see within the market, guys, right? So you see it hasn't returned 50%, just 23%, not even 38%. And as we know as traders, the market has to do what before it continues in a direction? It has to correct itself 38 to 50% of a move of a candle. So I know people grab the whole move right here, but even if you grab the whole move, you'll see that probably 50% hasn't been retested. And if you see, 50% hasn't been retested. 382 has been retested, but more than likely, because we are creating some type of structure down here, support, guys, if you just look right here, more than likely this thing will pop up, actually collecting probably 618 or creating equal resistance. But if we're trending down, I can see it going as high as 78% or 63%. What does that mean for the euro? Well, if we start seeing the euro actually gap up, you know what I'm saying? More than likely, it'll probably at least hit 50% and come down, or 618, guys. So pretty much we're in the parameters for the euro actually making some type of correction if it decides to do that. Now this thing is aggressively bearish. So sellers are strong in this market, but we do need some type of retest in order to solidify that we are coming down, guys. Because if not, it creates a new support or respects a previous high. The euro will just shoot up past this. But based off of what they're saying in their economy, that's why it's important for you guys to stick towards fundamentals as well as your technicals. Based off of what they were saying in their economy, they're looking at their inflation because they were inflated at the beginning of this year, but they're looking at their inflation to come back down, which will continue driving them into a recession. Everybody's in a recession besides the United States, guys. I don't know if everybody realized that, but everybody besides the United States is in a recession, guys. So let's use this information to formulate a bias, right? Now, even though the euro index is not open, if you guys look, it's not open right now, right? But we do have the data from when the market closed, which was the last move was what? It was bullish, guys. So more than likely it will gap up, causing this market to already push up, get bullish, and then probably either respect a resistance level, or if not, blow past through all this. I can see this market, slowly try to consolidate in this zone right here and then push up all the way, guys. If you look down here, based off the 4-hour time frame, we are in fact creating support. So if I just move my structure, and I like to keep it on the line chart. I'm going to go to candlesticks, guys, but I like to keep it on the line chart just because it helps you identify structure easier instead of getting manipulated by, wicks and a lot of noise within the market, right? So if you see based off of candlesticks, yes, we do have a structure down here in order to create support, right? And on a 4-hour time frame. So definitely looks like a break and recess to me. The fact that we haven't continued down, the only oddball in the room would be when the euro decides to open, which will be tomorrow. So you will get the well, tomorrow morning at 8 o'clock. That's when the euro actually opens, but the euro is still moving against the dollar, guys. So you will see its movements, react during like London session. You will see its movements react during London session, as well as pre-London, so forth and so forth, guys, all the way up until 8 o'clock. But once that market opens, you could see, a spike in the opposite direction. So say this thing started selling against us, right? More than likely when the euro opens at 8 a.m., guys, it will probably spike up. You know what I'm saying? So that's what I'm looking at for the euro. I'm looking at this level of support. I like it, guys, just to take it up probably up to this next doji right here, guys. This is the last area that the market dropped. I do see a lot of liquidity where the market could actually sweep, because one thing I don't like is when I see a candle and I don't see structure on the opposite side. What I mean is that, how you guys see this candlestick right here? See these two candlesticks right here, right? When it's followed by a wick, I need to see this not the exact replica of it, guys, but I need to see pretty much the market have structure on this opposite side for me to be convinced that yes, this is a selling move. Because just right here, guys, the market can come up, probably like 50% of this wick. Let me actually measure this wick. Let's see where we're at. Well, it did 618, 61% of this wick, and then the market dropped down from there, guys. But still, how high this wick is, there's a lot of money left over, because if we understand that when we break down wicks on a smaller time frame, what are they? They're pretty much just aggressive movements on a smaller time frame. I'm pretty much trying to find a movement for you guys. Man. So the fact that I can still see wicks on a 15-minute time frame, to me, that's cause for concern. More than likely, when the market, reaches back up here, it'll more than likely sweep this up and then decide to sell wherever it decides to sell from, guys. Overall, I'm bearish, but I am looking at a recovery for today. I am looking at a recovery for pretty much Wednesday, guys, going into Thursday, and then Friday it'll make its decision from there. But I already do see something, because we're on the 15-minute time frame. So if you guys see, this is consolidation right here. Let me go ahead and get that out of there. So this is consolidation right here. We could have a pullback into this zone, but more than likely, guys, if it does pull back, it'll be somewhere within this zone, and then we can take a buy from there. All right. So if you're still confused, turn it to a line chart. You'll see that, oh man, it is consolidation, right? I'm sure I probably got a lot going on. So this is what I'm going to do. I'm going to make that transparent. Well, clear for anybody that's struggling to see that. I know some of my viewers like watch on their phones, which I do recommend being at your computer, but I understand we just got to do what we got to do that benefits us, right? So small little breakout to the upside. I like that because it actually broke structure. So we should see it come somewhere within our zone, and then we take the buy. All right. So I'm going to set this up right here. Especially on a 15-minute time frame. Oh, what did I just do? So that's what I'm looking at. I'm looking for the euro to come down just a little bit, guys. It may not even come all the way back into the zone, and then we buy up from there. So if you're looking at an area, now this is just an area. Don't limit yourself or restrict yourself to the zone, but 06883, that's where I'm looking at for a buy. And I'm gonna do anywhere from 25 to 30 pips, probably 30 pips. That ratio puts us at a 1 to 2, almost a 2.5. So that's still good risk management on my part, depending on your account size, guys. And it's anywhere in the zone. So, I don't restrict myself to like levels. Once I see it come down far enough, or if I feel like it might get away from me, I'll enter in the trade, but I want to see it somewhere in that zone. What is that? 40. I'll do 40 for this. So what is that? 75 pips. Let's see, from this entry, 20 pips would be, let's do 25. Then we'll probably do like a 50 pip. Where are you at? 50. 07380. Then our entry, like I said, you guys can use this number if you choose, but anywhere within the zone. And you're not limited to obviously my stop loss. Anybody, that trades on their own, obviously you don't have to follow nothing that I'm doing in here. If you see better opportunities, roll with that. But this is just giving you guys my pretty much parameters that I'm looking at. What am I looking for? Text. So take a picture while you can. This is pretty much our entry. And I will set an alert to let us know. And pretty docile market today, guys. So, I'm not really looking to Hail Mary it. My actually focus is on the euro today specifically. So once I get that alert, I'll probably buy it all the way up until London, or whenever the market starts reversing, if the trade is still valid, guys, and then make a decision from there. But I'll definitely try to be, I will definitely, or I recommend, if the trade, hasn't hit your targets and stuff by London, which it should, you get out before London hits, because it could, spell a pure reversal. Definitely before, even if it is favorable to you, definitely before the market opens up at 8 o'clock tomorrow. What are we looking at? Entry, confirm. So yeah, Euro USD. Same thing with NZD USD. Now I know me and my teammates, we took this, well, me and my community, we took this trade earlier today. It actually hit our stop loss. Like I was buying it like somewhere. Well, let me actually back out. I was buying it somewhere over here. Market dropped down. As you can see, I'm still waiting on it to actually break my structure again, but the market is actually, returning down here to collect some liquidity. But I am still bullish in this market. I just think that, it just wanted to sweep some money down here, and we'll have our push to the upside. Once we get, well, is the dollar index open? Once we get the dollar moving, we'll have like more clarity on what's it's doing. Because as you see right here, the last move that the dollar made was bearish. Now, I'm not saying that the dollar is bearish after this move, but this is a start to pretty much the dollar making at least some type of recovery, which will line up with us buying against the dollar, if that makes sense, guys. So, anything else such as like USD, JPY, I know I was looking at a buy earlier, got burnt on it. And you see it's showing the same depiction as the dollar index, guys. So we did get burned this morning on both UJ and NU, but I'm looking for it to make a recovery and move itself down. But if you see, guys, it's showing the same thing. This was consolidation. You have your retest, 45-minute time frame. The market has broken all the way down. So more than likely, unless it will probably have some type of pullback, but UJ is overall bearish until we hit like a level of structure, which could be down here, if not the previous high within the zone. But I think that once we get down here, once we break this, we'll probably be heading to this zone and then create support. And then we'll figure out a move from there if the market is still trying to push down to collect some liquidity, which would match up with the dollar index, guys. So that's what we're waiting on. It should open up in the next 20 minutes, and that'll kind of tell us a lot about what the market is overall doing. Did this thing not come into my zone? I like that shallow pullback. I'm actually going to enter. I like that shallow pullback, actually. Blah, blah, blah. And if it comes back, comes down to my zone, I'll take that. Definitely make sure you guys are using proper risk management for all my traders out there. Would hate for you to take a mean loss just because you're trying to have you're trying to, what does my homeboy call it? You're trying to put a house on it. Trying to put a house on it. Hold on, guys. I'm entering in my stuff. All right, so yeah, I like this. It may not respect my entry, but I like it. But I got an alert down there for it. So that's my bias on a lot of these pairs. I'm bullish against the dollar. So the dollar is selling. I am bullish against it. Wow, man. Have y'all been following Tesla, man? Oh my gosh, yo. When I start dropping stocks, it's gonna be crazy, guys. Not for me making money with you guys, but more so what we're seeing transpired. This is literally about to change the dynamics of, wow, Ethereum at 1,700, yo. Oh my gosh, yo. Oh my gosh. I was going to talk about Bitcoin as well, guys, cryptocurrency as well. Man, I'm so mad I did not stay in my trades, guys. Oh my gosh. Definitely could have had it. All these zones, y'all see these entries right here? Definitely was going to be my entries. But we are at a level of resistance. What I'm thinking is that we might have like some type of shallow pullback within Ethereum or Bitcoin alike. And then we'll have our, like, make no mistake, guys, this is the time to be invested into cryptocurrencies. You guys can make a decision if you want, like I said, but more than likely, the market is overall bullish, guys. That's not saying put your whole life savings into crypto. Just buy in percentages, buy fractional shares of it, and you'll make your profit. And learn when to take your profit, guys. If you bought at a high position, it's always an opportunity for this stuff to crash a little bit lower, right? Always. So us knowing that, if we have good positions, don't withdraw all your money, but just withdraw a percentage of it, reinvest that, right? So yeah, man, cryptocurrency is definitely, I think this is about to be a phenomenal year, guys. A phenomenal year for cryptocurrency to make its recovery. Nothing like it did in the past couple of years where, it's like Bitcoin shot up to 70K, but what if it does? Like, I'm not sure. But at the same time, it's like the possibility is there. Let me look at GBP USD. So GBP USD is the only one that's looking like it's still bearish. Oh, well, no, it is creating support down here. So that could be false, but it's the only one that's not giving me the site picture compared to like NZD, USD, or Euro USD that I would like to see, guys. So I'm looking at that. I'm looking at oil returning down. Um, well, yep, I'm looking at the price of oil to shoot down just a little bit, guys. I do think we're overall bullish on oil, but I think we're just ranging right now until we have a breakout, right? So I think this phase we're just going to be selling down, so we want to get to a better buying position. More than likely, it'll probably drop down to like 60, like 64, 68, guys, and we'll have a way better buying zone for oil, guys. I would definitely recommend you guys invest in both on the stock side of things, but also as well leverage trading. And last but not least, US 30, guys. If you saw US 30 took off, what was that? Was it the beginning of this week? Yeah, US 30 got extremely bullish the beginning of this week. It did its little aggressive retest, and now we are continuing back to the upside, guys. If you see that, we are continuing back to the upside with US 30. So that's what I'm looking at overall. That's what I'm looking at overall, guys. I mean, you kind of have pretty much what I'm looking at for the market. Where we at? Yeah, you guys have what I'm looking at within the market. And then, just make a decision from there. I think NZD popped down a little bit or a lot of bit. Yeah, NZD actually hit. Where is that at? Yeah, NZD actually came down a little bit lower than I expected, guys. Well, no, I actually expected that break retest of my prior stop loss. So I think now that we have news, this is the part where the market is actually going to start getting bullish. So just make a decision from there, guys. You have your parameters. Be careful out there, whatever the market is showing you. Make sure you use proper risk management. Don't try to Hail Mary everything, guys. It's okay to get in and get out, and then just make a decision from there. So appreciate you guys' time as always. What was that? About 20 minutes today. So just take a quick peek at what I'm looking at for NZD USD. Guys, wait till it gets to the entry, break in retest, and then enter in the market for anywhere from 25 to 63 pips. Same thing with Euro USD. We're looking at it to go 70 pips. We're looking at it to go 73 pips. So once it does that, guys, we'll be able to, oh man, it came down to my entry too. So yeah, I like that. So yeah, I like that. So I'm looking at I'm more focused on Euro USD. NZD USD has to get to our zone. So I hope you guys make a lot of money with these setups. And I hope the market definitely plays favorable to us. You guys can catch me tomorrow at 7 p.m. for the market overview. I will talk about these trades as well. And any other trades that I took within my community, guys. And again, if you guys want to comment on the live feeds, maybe talk about, a trade that you took or pairs that you were looking at and what your overall bias was, let's do that tomorrow as well. So appreciate all my viewers as always, guys, man. Don't forget to hit that like button. Don't forget to subscribe. I know some of you guys may be in tune so much that you forget. Also, make sure you guys hit that notification bell so you can stay up to date on all my content. And as always, guys, I see you at the top because we're taking everybody to the top with us. This is the Digital Goat signing out, and I will see you guys tomorrow, Thursday at 7 p.m. Eastern time frame.